All right, so I'm live. Hey, Dave Knight here at Dave Knight Trading. Thanks for watching. Thank you for being here. Today is Wednesday, January 31st, 2024. Um, so I'm journal. I'm only putting things in my journal that, well, just this journal number 33. This journal, only things worthy to be written is the goal. So, hey, what's going on? Uh, so Paul Tudor Jones is kind of the topic today. I wrote some information out here. Key points to Paul Tudor Jones. I wrote two down. There's two key points to his success. 200-day MA on close. So a 200-day moving average on close in every trade that he tries to put on has a 5-to-1 reward to risk. And point three, defense. I said two, but 3 points that I want to use. Point three, defense is 10 times more important than offense. All right, so I'm going to, for lack of a better way of saying, I'm going to read what I wrote about Paul Tudor Jones overall right now. And this is coming, a lot of this information is coming from Tony Robbins, his money book that he wrote. I don't know, I think it was 2016 or so. All right, so Paul Tudor Jones money making philosophy, $5 to $1. So that's something that I wrote down. Remember, the goal is to take emotion out of investing, because emotion is what so often destroys investing success, whether it's greed or fear. Then Tony talks about 4 steps to investing. 1, don't lose, huh? Don't lose, right? Don't lose. Yeah, that's a good one, right? Number 1's don't lose. That's pretty funny if you ask me. But anyway, don't lose. If you don't lose, you live to fight another day. I care deeply about making money. This is Paul Tudor Jones' words. I care deeply about making money. I want to know I'm not losing it. The most important thing for me is that defense is 10 times more important than offense. You have to be very focused on the downside at all times. Why? If you lose 50%, it takes 100% to get back to where you started. And that takes something you can never get back, time. So that was his first point that he made. That's a true statement, right? Time's something that none of us can get back. I know I can't get back. I'm getting ready to go another month and a half. I'll be 57. So point 2, risk a little to make a lot. Uncover investments where you risk little to make a lot. Asymmetric risk reward. Follow overall trend in market. Make an investment so you can get a reward of 5 times your risk for every dollar risk. 5-to-1 reward risk. So Paul Tudor Jones' philosophy is to find, for every dollar that he risks, he wants to make $5 out of the market. So that was his key. Now, at the time that Tony wrote this book, Paul Tudor Jones had 28 years of success. I think he had an off year sometime after he wrote that. I don't know if that's true or not, but I think I recall him having a years sometime after this book was released. I could be wrong on that, so I don't know. I'll have to do some more research on that. Point number 3, anticipate and diversify. Now, this is Tony Robbins' 4 steps to investing. So number 1 was don't lose. Number 2 is risk a little to make a lot. Another duh. And then the third one's anticipate and diversify. Anticipate failure by diversification, asymmetric risk reward. Most investors have limited information by the time you get all the information. Everyone else knows it, and you will no longer have the edge. So how does that apply to trading? Nah, I don't know, but that's more of a long-term investing, right? To diversify. I think as a trader, you have to concentrate on just one market. Well, that's the path I'm on right now, Nick. I'm trying to learn from some of the best that are out there. And then Paul Tudor Jones was a trader. If you read what he is, that's why I concentrate on him. Nick asked, David, why are you reading investing books when you day trade? I don't get this path you're going on right now. Paul Tudor Jones ran the commodity firm Tudor Investment Capital or something like that. Bob says, Dave, you have a lot of good years left. Nick says, for sure, Paul Tudor Jones was a killer, but it's investing, not the same philosophy. Well, true and not true, right? Can you apply, this is, let me get point 4 out before I get off track right here. So we had 3, and then I want to, that's a great point you brought up, Nick. Don't lose, risk a little to make a lot, anticipate and diversify. Now that's an investing thing, right? So your extra money, that's what I've done with my investment money. I got some in stocks, some in bonds, some in real estate, some in apartments, some in REITs, you know, so that kind of stuff I have done. We have our trust fund that covers all that, so I don't want to get into that. And 4.4 from Tony, you're never done. I like this point. They're never done learning. They're never done earning. They're never done growing. They're never done giving. No matter how well they've done or how well they've continued to do, they never lose their hunger, the force that unleashes human genius. So, all right. So I got some more points I want to talk about there that I wrote down on the 30th about Paul. Sorry, I didn't want to interrupt. All right. So Paul Tudor Jones is one of those gentlemen. I mean, I've watched and read a lot of stuff over the years. I went to back up. I went through Tony Robbins' 4-day. This day 1, day 2, day 3, and he had a bonus day. His bonus day, he talked about Paul Tudor Jones. Pinky day, 4th day, whatever you want to call it. He talked about Paul Tudor Jones, and then I got me thinking because I had done some research on him when I was a lot younger. When my number 2, I'm not allowed to say, I've been married this many times, and the 3rd one stuck. But on this one, number 2, she told me that she wanted to not be married to me on our vacation in South Florida. That was South Miami Beach. So I walk into the room. I walk in there, and there's 2 double beds. I'm going, what is this? That's how I got introduced to my $3,000 vacation that I'm getting a divorce. Anyway, so I remember he had his I think he had a branch in Fort Lauderdale of his commodity firm. I think he had one in Greenwich, Connecticut, and he had a branch in Fort Lauderdale that he could, do his business there, and he had a house there. Probably still has his home there. Anyway, I thought, well, I'm not having, this is not going to be a fun vacation for me. So I got in our rental car, went up to Fort Lauderdale. So South Miami Beach up to Fort Lauderdale. It was about an hour drive maybe. And I walked into the the branch office or whatever it was that he had there, and then I lost my nerve to follow through with that. So I've always thought about that. You know, this would be 1990. When did she break up? We got married. We got number two was it was 98, 97, 97, 98, somewhere in that area. I can't remember. Kind of all just kind of blends together as you get older, if you know what I mean. So that's one of the things that I thought, what if I would have walked in that door and really, I didn't have my resume on me. I wasn't expecting to have to do that at that point, but I was working at Federated Investors at this point as a trader for them. I was working on the money market desk and the corporate bonds desk at the time. So I actually had a job in trading at that point. And I thought, well, this is probably a great time. This is someone I admire and respect. I should walk in here but you know, this is before I had a cell phone, but it's before, you know, I wasn't thinking about anything like that. So I probably, you know, what if the old what if I would have, right? Let's see here. Every investment's a trade. We're just quibbling about the time frame. Investments have a bigger stop. But Nick, point taken. Garrett, I do not think PDJ would have the same success today starting with a limited budget. Yeah, you know, I was thinking about that too. I like your point, Garrett. For instance, he predicted the 1987 Black Monday. That's his claim to fame, if you think about what. And Paul Tudor Jones also later on in 2008 caught the subprime market that fell. So two of his biggest winning years came on down. Now he says he likes to follow the trend, but if you do more research on him, you'll find he's more of a contrarian that picks tops and bottoms, but he doesn't pick the exact top. He doesn't pick the exact bottom. He uses two concepts, right? He uses the 200-day moving average. We talked about this 3 points. If you come in here late, key points about Paul Tudor Jones. One, he uses the 200-day moving average on close basis. Remember, the fine print says he uses on close basis, not open, high, low, close. He uses simply on a close basis. That's what his note says. So that's a very fine point that you could use. That changes and skews where the close would be on your charts, right? Where your 200-day moving average is going. That would skew it a little bit. So what 5-to-1 reward to risk. So asymmetric investment is what Tony Robbins calls this. So he's willing to risk 1 million to make 5 million, basically. So he can be 80% wrong and still be right, right? So if he makes 20%, he breaks even, right? So all he has to do is 1 out of 5 to break even. So that's kind of the thought process, the investment side over into the trading side, Nick, that I was thinking of. And point 3, which I'm not so great at, and this is what I have to work on, right? Defense is 10 times more important. So he's all about watching your losses. So then let's see what we got going on here. 100% do not think. Yeah, limited success. So think about today. Things have changed, right? You have a high probability. What's that called when people can come in and out of the market really fast? I know you guys can think quicker than me, but that high volatility, high something, hiya. Hey, yeah. Hey, yeah, hiya. They call it, it's called heya, but it's hiya. What's that called? HPT, right? High, can't think of the name of it. But anyway, let me finish my thought process here on Paul Tudor Jones, and then we'll take some questions here. So one of the last part of what I wrote on yesterday in my journal was this. This is on page 283 and 284. I summed it up a little bit, but it's on his Tony Robbinson's money book. One of his greatest strengths is that he knows he can be wrong and still be successful because he uses asymmetric reward to guide his investment decisions. He's always looking for what he calls a 5-to-1 investment, where he risks $1, he believes he can make 5. Jones is willing to risk 1 million when his research shows he's likely to make 5 million. Of course, he could be wrong, but if he uses the same 5-to-1 formula for his next investment and he's successful, he would have made 5 million minus the first investment loss of 1 million for a net investment gain of 4 million. So in other words, he can be wrong 4 out of 5 and still win. With a single home run, he's earned back this total investment of 5 million to set up the game to win. 4 out of 5 can be wrong, but the fifth decision can be a success. Back in business means you only have to be right 20% of the time. So that was my notes that I wrote last night. And I haven't finished today's side. So I've got some more stuff that I did on the 31st. Yesterday, last night's been. So anyway, I think next point's why am I going down this road? So, frankly, what I'm doing at these funding firms isn't working. I can't utilize at Top Step. Yeah, I had a $500 loss, right? I think if you think, I forget what it was, but if you lost more than 500 in a day, you would lose your account. I don't know what Top Step's rules are now. I don't care about what their rules are. I don't follow them. They threw me out. I was glad to go because I still believe with my heart that they've created. I don't know. I'm at the point when I left, it was a hamster wheel. You had to go through 1 step to 2 step to 3 step. And then if you failed a couple times and you couldn't go directly into the funded account, you had to go a roundabout way to get in there. I thought, well, so let's not talk about that. So Top Step does pay traders. I earned from them. I made money from them, both as an affiliate but I think I was there 7 years of my life. Now I've been at Apex. I'm closing in on 10 years being in a prop funded environment. And the best I can say of this 10 years, I've had a couple good years. I have not made more than I've lost at Apex. Why is that? Well, a lot of it's me, to be completely honest, right? But some of it is the environment that you're in. I was trading. If you followed me, I've traded to crude oil for many years, and then last year I switched gears from crude oil to NASDAQ, and then I was trading all of last year. I traded the NQ. And you know how fast the NQ moves. Crude oil used to trade as fast as the NQ at one point. NQ is a very interesting market. I don't like the E-mini. It doesn't move as fast and as so the NQ MNQ is what I'm trading today. I'm have to go through some of the questions here in a minute. So MNQ is what I'm trading now. So I'm working on what the thought process that got me thinking when I was listening to Tony a couple days ago. I think this be Monday. He talked about Paul Tudor Jones 5-to-1, and that sparked something inside my head saying, "Hey, wait a minute. When I take my risk to reward right now that I have set up in." And I don't know if it's feasible because I've been racking my brain if I can make a 5-to-1 work on 9 contracts. And to be honest, it doesn't seem most trades don't go to. There's a lot of retracement, right? There's a lot, and then The problem with retracement at these prop firms, especially Apex, is you have that max trailing drawdown that's behind you, right? So if you allow that market, because you guys know what in here. If you've got a 2,500 drawdown and you go up $1,000, job done, and then allow that sucker to come back down, you only have a $1,500 drawdown from that point, to be honest, at that point. So your 1,000 coming back down, it's difficult, right? Because you have to. So the thought process was, how do I use the MNQ? This is what my searching in December was about. How do I use the MNQ to trade the way that I used to trade when I was making lots of money, when I had my futures account open, and I don't have the confidence to open up my own futures account. I know that would be a question that I have right now. Until I can make money in just one thing at Apex, right? One account. I mean, these guys are running 20 accounts and making money. Have you seen what the payout is right now? It's like $90 million Apex has paid out since its inception. So I just want a cut of that. Right now, a cut of that is 2,000 your first month on one account, right? 2,000. I think the third month you can request even more money than that, correct? Anyway, so let's go back and look at some questions. If there's any questions here, let's go back here. Okay, so Nick says, I've read a lot of stuff on market wizards and traders in the 80s, and all of them say that in current markets they wouldn't make money. That's cool. Thanks, Nick. From software, just simple Quotron. Just look at that old film. That's correct, Garrett. There's that 30-minute video that he has his Quotron behind it, right? The markets still move on a dime sometimes, but you're calling in your orders right that. You need to stop. You're your biggest problem. Yeah, that's a true statement, Garrett. I am what I am, right? See this journal behind me. So this was my last journal, journal 32. I don't know if I can get that in there or not. Yeah. So I had wrote down there at the end. I haven't made up my mind everything here, but I thought I wrote down some of my accomplishments. So I did get paid $1,500. All right, so let's go on here. All right, so Nick says, but the point I don't know, Kid N, asking is your trading isn't really going to benefit from these concepts. You got to find out where you've been screwing up. The information is in your trading, correct? Correct statement, Nick. I will agree to that. Must have an edge, Bob says. Can't do what? Yeah, there's Bob's point right there. What happens if it doesn't move 5 times on average? That's the dilemma, right? The dilemma is I have a 3-to-1 setup right now with the way that I'm going at it. So I'm not I kind of discount a lot. I'm smarter than I give myself credit for, but that's also because I know that I'm a loser, right? I'm smart enough and humble enough to know that I don't know everything. What I'm struggling to figure out, I've figured out how to put together a 3-to-1, but that's Bob's point right there. How often does the market move in your favor without a retracement coming back in a day trading environment? So that's why, I don't know if I have an example here, but okay, so 9 contracts MNQ. You have to make up the way that I used to make money, funded firms, but when I was with Marco and some other things, you go back and research, see that I was doing pretty good under my former boss that I was working with at one time. And he was a prick, got me thrown out of that brokerage firm. And then I just decided at that point that I was going to go into Top Step. That's one of my, looking back at that, it's one of my worst decisions that I ever made, going into a prop environment instead of trading my own real money. Because this learning curve that I've been on right now, the prop firms throw this shit out that you have to make that if you're losing 500 on a 50,000 account in the old firm, it's unrealistic, right? The whole Top Step environment is built around you having to buy more stuff. So it's a consumer environment, right? It's not an investing environment. It's not a trading environment. It's a consumer environment where they're taking advantage of people like me, maybe you, or those that are watching this, that, the Gambler fallacy, all the other stuff that you've read. You have to learn how to operate inside an environment that its rules are even strong. Futures in itself is a tough market already. I'm not speaking anything that's French to you right now, correct? German or whatever, Russian. I'm not speaking. Futures itself is a tough environment. And then you add the caveat that all the rules that they put onto you to handcuff you, and all those rules being handcuffed against you, you physically don't have a $5,000 account. You only have your account high, or 50,000 account. You have a $2,500 account. I think that's the best way that's been described at Apex. You only have a $2,500 account, but in reality, you need to treat it as you only have about $1,000 account, in my humble opinion. Because if you're going to have a drawdown of 1,500 inside that 2,500, 500 of that drawdown might be account high to where your balance is, and then you might be $1,000 under that, and then all of a sudden you're $1,500 down. You're $1,000 away from your drawdown. The only good news is your account high doesn't move once you come off of it, right? So once you make a new account high, then you have 2,500 in that low. Eventually, you can get to the point where, I've only done this twice in my career, got to a point where I made more in there where it stops at 50,100, right? My payout that I got last year, I could have taken out $2,000. If and when it happened, not if and when it does happen next time, I will take the full amount of money out, regardless of what it is. So if it's 50,100 and you got to be above, I think you have to be above 52,500. If I'm not mistaken, I think that's the amount. You got to be above 52,500, and then you have to be 2,000 above that is 54,500. So you have to be 54,000. You had to be 2,005. No, what was that? You have to be $2,000 above 52.5. So you need to be at 54.5. And when I get to 54.5 next time, that would be a good spot to open up the second Apex account and start running that one, knowing that there's $2,000. Take it to 52.5. You still have a drawdown of 50,100. As you're waiting for the payout on the other account, you have that you start trading. Now you need to qualify the other Apex account along the way, so that it's sitting up there ready to go. Now Apex has a rule that you don't have to pay the $140 or $85 right as you qualify. So that changed in December sometime, I think, or November, that you can do that. So all right, so I didn't really get off track, but we're talking about how it's hard to make it. It's extremely tough. That's not framing any other way. It's extremely hard. Let's go back through here. All right. So let's see here. All right. Let's see what that does move. It's working day. You fall in love with your success. There it is. There's Gary. Yeah, it is working day, but you fall in love with your success and try to trade bigger than you should. A lot of my failures are because I hit this right. I hit this, bam, 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 bam. And next thing I know, I'm in, and before I was in 5. I know how to get to, if I wanted to trade unlimited in the NQ, I can get one of those to $3,000 in a day. I've done that before. I know I can. All you got to do is trade 5 contracts. The second contract, the second time you go in at 3, and then you make up the difference with 1 at the end, whatever you're behind on the 3,000. So coming in on 5 on your first trade, your biggest, if you pick your best, your A+ setup, right? So this is how I've got $3,000 on multiple occasions. You take your best trade setup and you trade 5 contracts on the NQ at it. If it blows against you, you probably will be sitting 1,500 down. But if it moves for you, you can be up $2,000. Your next trade that you're on, you have three contracts at it, and that can get you that extra 1,000 you can do on 3. It might move against you 500, 600, but you can make the additional 1,000 to get you above 3,000. So 5 contracts to 3 contracts, you can get to your $3,000 target to get to the next level. I'm trying not to do that this year. It's really tempting to go to back to the NQ, trade that first one at 5, second one at 3, get qualified on one day, and then just goof off for the next 6. But am I really learning anything along the way right now? So now I have a qualification. I can get there. But if you trade the same way at the that's the other thing is that you just go at it on if you have unlimited funds, $140 a pop, you take one of those and you trade the same way you got qualified, and you try to push that first day to $5,000 gain, $3,000 to $5,000 gain, and you're willing to give up the $140. I've done that before too. That has not worked for me because I've not had the luck with me. Because every time that let's say that, I don't know, I think that I only qualified 17. I think I told my results last year. I qualified 17. Not all of those 17 PAs that I made. Anyway, so it's hard. 5 to 1 is absurd. True. I made 6K today at 200 a time. That's cool. So Garrett, how are you trading how do you go about your day? 5 is too effing big. Yes. This is great. 1,100 is max drawdown on 50K. MTA, this is all complete nonsense, man. Focus on trading edge, not gaming a system. 2 max. I love it, Dave. Folks, just enjoy the show. Mark my words. 1 year from now, Broken Record will be on repeat. All right, Kip. I know how you feel about me. That's good, though. I appreciate that. I have my greatest year, just so you understand where I'm coming from, was $500,000. My second greatest year was $250,000. And I've been able to live off of that gains for my lifetime. And then I've had a whole bunch of six-figure years. Now, I have not done that since I've moved on to Apex and all this bullshit that I'm in right now. So let me ask you this, guys and gals, if I have any there. So Garrett's, he's trading 2 max. What's your loss? What's your profit target? What's your goal? What are you trying to accomplish? Garrett says you're thinking about positions is completely screwed up. I never let 200 go away. 200 minimum profit. Yeah, I love you too, Kip. Here, I'm going to give you a little heart right there if I can do this. Let's see if I can get this thing to work here. Your trading has sucked last 10 years in day trading, probably. That's no. Yes and no. But mostly your question to that, your answer to that is correct. I've not transitioned correctly into the prop trading firms. As I always look at like the $35 reset or the $33 this, that, and the other. Like last in the month of January, I spent $205.80. I failed 6 times. So I don't think of it. I mean, 3 resets and 3 things, right? So that would be equivalent to losing $15,000. But I only spent $205.80. So my brain waves is not working correctly. I'm finally coming to the decision that my 1, 2, 3, even though I've got what I believe, looking back 9 days, having a lot of the stuff I put there, average daily range of movement, how far a market, what are my strengths right now? My strengths is that when I do get in a trade, if it's moving and the momentum's moving with me, it'll move 1.5p before it retraces. So that is something that I can not bank on, but more times than not. And today, you bring up my spreadsheet here and print it off. Geez, I haven't printed off a spreadsheet in 2 years, I think. So what are my strengths? Let's go back here and while I'm printing this off, let's look at your trading has sucked the last 10 years. Kip, you got that right. You're trading tomorrow, February 1st. I like Monday and Tuesday. I didn't trade today. Oh, how about this? So I did trade today in Sim. So I'm just goofing off today and not really paying attention to what's going on in the market. Now, in the back of my mind, I knew today was FOMC day, but I was just sitting around goofing in Sim. And next thing I know, the market zooms down going, what the hell's going on? Then I remembered that, ADD hit in. It's FOMC statement day, or federal funds rate and whatnot. And I know it comes on 31st. Every year, like clockwork, 31st of January is the first, whenever it falls, or that Tuesday, Wednesday of last Tuesday, Wednesday of January is the first FOMC meeting. That you can just bank on that. All right, so spreadsheet. This was my crude oil spreadsheet, and I've moved it to the NASDAQ. Now, 9 days, and I look back 9 days, and this is a lot of the work behind the scenes that figure things out. So going back 9 days today, 1R on the NASDAQ is 25 ticks. Now, how many times the NASDAQ, when you enter 25 ticks against you? A lot more times than I care to admit, right? Volume right now is something that's it's that elusive thing. So when I was trading, before I moved over to Top Step, I was using CTS prior to them. Then prior to that, I was using Genesis Trade Navigator. And prior to that, I was using something else. I can't remember. Joe Ross had something. So I've been, I'm old enough to know here's the thought process for you. My very first trade that I did, I used, do I have it in here? Yes, I did. Hey, I got another notebook. I was thinking I needed to buy another one, but I got another whole notebook. I think you'll have to look at that later. But my very first course that I bought, this might bring back some memories, those that are old and to know. Here's who wrote this course. This is my very first commodity course that I spent money on. Who wrote this course? Dun 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 dun. He spent time in jail. He did. Ken Roberts, right? Ken Roberts. And then I got here's another one. I got it over here, I think. Here's another dude that spent time in jail. The $1 Million Trading Guide. That dude right there, right here, pictured, his name is Nick Van Nice. He ran a thing called CTS as well, Commodity Trend Service. And then CTS today, which kind of confuse you, CTS today is Cunningham Trade Service or Cunningham something. But back in the day, it was Nick Van Nice, right? Nick Van Nice ran that. I've been around way too long, way too long. So I came out of school. Anyway. So long story short, my very first commodity trade that I did was on live hogs, and my round trip commission cost was $100. Think about that for a second. And probably the thing that I won that very first trade. In fact, I won on this course. I won on this course. And it probably was the worst, best thing that ever happened to me, or the best, worst thing, whatever. So my edge is volume reading. So let's go back through here. How did you trade before for a firm? I was with the Federated Investors was a big firm. They, at the time that I was trading, we would move $15 billion around. I think it was 15 billion. I think they're called Federated something another now. I think the owner. It's been so long since I figured it out. But my very first trading job that I had was at Federated Investors. All right, so sending love from South Africa. Thank you. Back to you as well. I'm here in the If you know where I am, I'm outside of Pittsburgh, about 45 minutes to an hour southeast of Pittsburgh. So if you look at Pennsylvania, home of the Steelers, the Pirates, and the Penguins. Kit says, I'm trying to get you past this mental block. Amen, brother. I need to get over this. This is the year that I'm going to get over my mental block. So once again, the recap today, why I did that. Paul Tudor Jones, 5-1. It's really not feasible. I mean, I scratched my head the last 24 hours trying to figure out how you can set up for a 5-1, right? So if it's 5-1, you can set up for it. So for instance, I can run one of my contracts at a 12p target. Today, that would have been 371 points. How often does the market move 370 points in the day in the NASDAQ? Maybe once a month. Maybe you have 12 times a year that it goes crazy, but that would be at only one contract at 50 cents. So 371 points times 4. So that would be today, that would have been 371 times 4. It's 1484 times 0.5. That still would be one contract at $742. But there's probably a better way to eat the elephant, right? And then Garrett made a killing today. Good job today, by the way. So Trade Nav. I used to use Trade Navigator. Williams. Nick Van Nice is the other dude. That was then. Let's focus on getting good now. Okay, so Nick says, but Dave, that was then. Let's focus on getting good now. What worked then maybe doesn't work anymore. So how are you going to fix that? Exactly. So that's the thought process I'm in right now. How do I utilize, for instance, one of the things I said is the market can move 1.5 times on a momentum-driven move. Today that worked out to be 46 ticks. So here's my dilemma I'm in right now. If I'm risking 50 ticks on, actually it's 51 today. If I'm risking 51 ticks on 9 contracts, 0.5 times 9, that today was $229.50 when I first enter the trade. And then I believe I'm taking off. I'm going 5, 3, and 1. So I'm taking 5 off at the, and I haven't made this. Here's my dilemma. Do I take 6 off? Do I keep 2 on? Do I keep 4 on? There were 3 trades today that I had. I made, maybe there's more, but I remember 3 trades I had today. I think I pulled out like 1,500 today on Sim, but there were 3 trades today that hit 1.5 easily. All right, so I did Profit Unity with Bill Williams in his home. Those guys are real old school. I worked in the World Trade Center in 1984. Cool. I had, when I was working at Federated, I had still kept ties with some of the guys that were working in Bear Stearns. When the towers fell down, I lost a friend that day. My son is in Exton, PA. Cool. I know where that is. I'm living outside of Greensburg, PA. And Bob says you might be feasible depending on TF. What's TF stand for? Garrett, stop it. Stop, please. Stop what? What am I stopping? But you got to be Johnny on that mouse. All right, so you got velocity, volatility, and volume that I track daily. Velocity today was 30.9. Volatility was 2.52, so 25. And volume over the last 9 days in the Nasdaq's been quite high. It's 1.1 million. So volume has been high in the month of January. So a 1P target is easy. The market moves 1P more times than not. So today that was 31 ticks, 30 ticks, 31, 30.9. So once you enter the trade, the market is either going to move 25 ticks against you or 30 ticks. I guess today, if let's just round it off, the market's going to move once you enter the trade. The market's either going to move 25 ticks against you or 31 ticks for you, depending upon how you enter that trade. One of the things, that's a good point. I like what you wrote right there. My volume indicator is on the 3 to 5 minute. I like my volume on the 1, 2, 3 chart, but I like it a little bit better on the 3, 6, 9 chart that I've got going on, tick chart, because it doesn't, the 1, 2, 3 chart shows too many signals. So what I've got myself doing now I've been testing in the month of January, running 2 separate things going on: sim account, real account. Real account the way I used to trade, sim account going a different way. One of the things that I've finally is trying to, when I'm in my sim, I'm trying to not have as many trades in any given day. That's where my strength was back in the day when I was making money. Was I wait for a trade setup and then I get in. Today, for instance, there was some real high volume that came in the market. I mean, it was huge, but it didn't put a dent in the down move. Didn't stop it. So one of the things Paul Tudor Jones talks about, trend's your friend, right? So there's got to be proof before you get involved. A lot of my failing happens when I try to catch a top or bottom. I know this. So since I know that, but I know also that side, the reason why do you try to go after the top or the bottom? Because if you can catch it, it can be extremely profitable trading day, period. Because you've got a point in time, if you hit the top, that your stop loss, what's the odds of that running there if it's moving? Because it'll fall really quick and then you can move. So going back to my original thought process, before I had this $2,500 drawdown, if I was trading a series of 3 contracts like I did when I was trading with Joe Ross and all his stuff, so a series of 3, 6, 9, however you want to do it, but series of 3, you're going to have 3 separate targets inside that move. That's why I've got 3 separate targets inside my trade situation, right? So I'm taking off something, and then I got the one trailer. Ideally, I'd like to trade 1, 1, and 1, but you can't trade 1, 1, and 1 on these prop firms. Why? Why can't you? Because of the $2,500 max trailing drawdown that kicks your ass if you stay in the trade and allow that market to come down. Even though you've got a profitable trade, you got the account high, right? You have the account high balance. You might be up $1,500. Your maximum might be up another $1,000. But as you're coming down there from there, and you add, so you're adding to a winning position. In that case, your trail, all of a sudden, you get smacked out of the market because that double-edged sword of the $2,500 drawdown that kicks your ass. So the way that I have approached the markets as a futures trader really doesn't work. So I got quite good at trading at Top Step using the $500 max drawdown. I would blow it. A lot of times I didn't. You had that you could lose what I think 3 times. Wasn't it $1,500 drawdown? But you can only lose less. If you would lose more than 500 a day, you're out. Well, one of the greatest things of Apex is that it gave you 2,500 drawdown. So Garrett's talking about volume. Volume has been, how do you put it? Yes, the market can turn on volume, but it doesn't necessarily turn on volume. So as my education into volume, even though there's a high spike in volume on the charts, doesn't mean that could be that volume could be coming in as stop running, right? So someone's running those stops. You think that would stop it in the market. So they go after that market, but sometimes it goes up to there and then it doesn't turn. It just flies through it even more because everyone's selling off into that volume, right? They're selling into that volume because the market movers move it to those contracts that are up there or down there, whatever which way they are, and then it flows down even further. But sometimes volume switches around. So volume's a tough concept. Let's just put it. And Garrett, if you got it mastered, God bless you, man. It's a very, very tough concept to master, volume. And that's true. Garrett says very few people actually understand volume. Volume is a difficult indicator, and it's very hard to get it to show up on your ninja charts. Although what I will say about volume is this, and I really believe it, volume will show footprints in the sand. It can be a possible turning point, or it could be a possible failure point. That's volume. You have to determine at that time, and and the markets are moving fast. Whenever volume is there, whenever you see high volume coming into the market, it's a fast moving market. There's no other way to describe when high volume comes in the market. It's moving quickly because they're stop running or they're adding to the contracts. One or the other is happening. We don't have that information and knowledge. That's my humble opinion about it. I could be completely wrong, but that's what I see happening. Forget everything you know about volume, please. Volume leaves footprints. Garrett, if you make money on volume, that's awesome. But you have to, even if people make money in volume, it's a good indicator. If you got it out there, people use the volume. What's that one thing that the people use? Volume profile, I guess it is right now, right? Is that what it's called? The profile. I hate that damn thing. Anyway, getting back to my point. So I've got a 4-minute bar chart that I have off to the side that I have been using to help lower my entries. Garrett, how many trades did you have today to get your money? How many trades did you have today? Do you know? To get the money you pulled out of the market today? I believe you. I think people can learn from each other. I'll pay $2,000 in fees to make 4. All right, so I'm not at my computer. Okay. Well, let's say you had a certain amount of trades. Let's just call it X. Not all your volume trades that you enter X were going to be winners. So the other side of that is what's your loss? What you're after 200. What are you willing to lose per trade? Are you willing, if what you're telling me here, I'll pay 2K in fees to make 4. So what you're saying is that if you're at Apex and you have 20 accounts, you're willing to blow them all and just buy another 20. See, I'm not, if that's the way you're going, that's not the way I am trying to approach it. I'm trying to get back to what my strength was. You're on your laptop. Okay. So where my strength is recognizing that volume can and does leave footprints in the sand. I mean, there's no doubt about it. I can pull up, I don't have my computers I don't have but if you go back and look, somewhere between 11 and 1, there was this huge influx of volume today. But it didn't really move the market. But it was the biggest, and sometimes that volume comes in and it turns the market over and it ends up being the bottom, or it ends up being the top. Volume, on the other hand, can push through a point and there's nothing there, and then it turns around. So at least that's my humble opinion of volume. Volume it's a leading indicator. It's the only indicator out there that's not looking back, in my humble opinion. Would you agree to that, Garrett? Volume is the only leading indicator that doesn't look back, that it's right there, it's live. It's just showing when it comes in, there's something going on. There you go. Volume leads price. Exactly. I like that. That's a great way of looking at it. Volume leads price. So where we're getting at. So I believe it's a leading indicator. Those that don't trade with the volume are that's why I have volume on my tick charts. But I specifically don't have it on my bar chart because I don't want to see all that craziness in the market. So but I think it's more important when it's on a higher time frame. I think Garrett will probably agree to this. When you see higher volume on a higher time frame, it's more important. Would you agree to that, Garrett? So volume comes in the market. When I see it come, how I see it right now, I have 2 tick charts on my charts. I have the 1, 2, 3 chart that I used to use it for trading with the highway to try to minimize my loss at Apex. That's why it's there. But then I tried to trade off of it, and that's not its purpose anymore, because it causes too many false signals. The 369 chart is a great chart. If you can catch the tortoise side of the trade, you can trail behind it on a very good trending market. But what I've noticed on the 369 chart that I've got, and why I have it on there, but the volume indicator that's on there, when it shows up on the 369, and also shows up on the 1, 2, 3, meaning the volume, when you're looking at volume, the best way that I can think of it at this point, the way I look at it, when it spikes in there, it comes in and it's a big amount. And some of the best trades I've have to this day are the ones that you can see that interpret that data that comes in and trade off of it. Because that, when it does come in, when it shows up on the 369 and the 123, and it's high enough to make a dent in the market, it can turn it around or turn it up. No doubt about it. Volume is extremely important. I will not dispute that point, because I'm a volume guy that loves to figure that nut out. That's the nut. So Garrett says, I will show you my indicator. No, it doesn't matter the time frame. See, that's where I disagree with you, Garrett. When you see volume in a higher time frame, it confirms the lower time frame. So when you do see it come into the market, now granted, it's flowing in quickly, so it's the tick charts, 123 ticks coming in and 369 ticks coming in, just a little bit different. But when I do see it come in there and they work together, that's a stronger trade setup, in my humble opinion, when the volume kicks in. So some of my better trades that I have, 2, 3, and the 3, 6, those two tick charts come together in volume, and I'm able to catch that bottom or that top, and I ride it for all it's worth. Volume is used to compare to the bar in front of it. Oh, so you have a volume indicator that shows how much volume's coming into the market. If I knew what the code was, I was like a code, my volume indicator would change the trading world. You know, Garrett, if you got something that keeps you the edge, keep it, right? This is beautiful. All right, so, but it sounds to me that you're willing to, Garrett, it sounds to me that you're willing to risk the fees to get, so maybe I'm wrong. If I'm wrong, my goal is to take one account, one EA, turn it to a PA, and take that sucker to $100,000, 50,000. So basically, get it up $50,000 on the 50,000, so that I can trade the way that I like to trade. Cool. Email me. Sit here. Let me put you my other email. I don't know if it works anymore. Send this one. I think it still comes in. I think it's. I still have. I switched it around. I think this still works. Fire that off to there. I think you'll be. I moved my host account around, so I think that still works, even though I don't use 1, 2, 3 day trade anymore. I still own the rights. I'll sell it for $10,000. I'll sell it for a lot less than that too. But anyway, so volume. A lot of my volume is a powerful indicator. Garrett, I know will agree to that, right? We will agree that volume is a powerful indicator. That's probably why you might have ran into me in the past, but that's awesome that you've been able to make it work. Now, what am I trying to accomplish? That my big goal, I just told you what my big goal is. Take one of these MFing PAs and make it $100,000. In other words, $50,000 of my own money, taking money out along the way. So I call it the stab way of doing it. I don't know if this will come up, but let's see if we can get this to work. This might show up correctly. All right, so let's print this off, because this is cool. See if I can get this to work. No, it's not going to print right. But if you take a certain amount of dollars out, Jesse Livermore, right? See if we, well, this shows some of it. This will work. All right, so put this up here. So we can get that up there. Let's say you start with a $5,000 account. Once you get to 7,500, you ask for five. I think that's what I had it. You ask for you have a $2,500 gain, and you want to take $1,250 away. You're old as shit. I'm doing this for 40 years. So just following these 7 stabs, going half and half and half and half. The bottom line of that was you'd have a stab 12 is 58,000. So there's your $100,000. Along the way, you've pulled out, the last one, you have an $87,000 account plus their fake 50,000 they give you. You've pulled out spend account. I think spends half of that. I think you pull out about $60,000-$70,000 along the way of getting there. But there comes a point that you want to move from MNQ to the NQ at some point. That's kind of an interesting thing that you can think of too. As you're moving forward, you use the MNQ to be able to get to the other one. But once you get a certain dollar amount in your account, you can move over to the big brother, as the saying goes, right? You can get out of the micro and go into the mini. So factory direct modular says, amen. After you get past, say, 54,000 in Apex, 50,000 account, you can be a more open-minded trader. That's a great point. I've only been able to get there a couple times in my career at Apex. But what's the goal? The goal, first off, is to get to where I can trade the way I want to trade and not worry about that 2,500 frickin' drawdown behind it. But that's the way the game's played right now. If you're playing at Apex, you have to follow behind it the way they tell you have to do it. So those with the gold make the rules, as the saying goes, right? My brother, boy, I tell you what, we thought about opening up our own funded firm right when Top Step came out. He's like, how much you think it would cost to run that? I go, I don't know. He's like, he was willing to put money in it, and he's my CPA, MBA brother, and all the other things that go behind it. We thought about it. We ran through the numbers, but I didn't want that responsibility to be the face of that. Send me a PDF. Anything you want to send to me, I think you can send it here, Garrett. Boy, we've been on for an hour, and I only planned on doing this for talk about Paul Tudor Jones. And Paul Tudor Jones had 3 things that I want to leave with, and then I think we'll call it. I'm getting kind of tired, guys. Well, it's 7 o'clock here. 3 key points that he, now obviously is tough, but his 3 key points to leave with was 200-day MA on close, 5-to-1 reward to risk, and defense is 10 times more important. I will agree on the last one, right? The 200-day MA on close basis on the daily charts. That's an important indicator, but how often does that come in play as a day trader? Very, very, very seldom, right? But when it is there, it can be a very powerful area. How many times can you earn 5-to-1 as a day trader? I'd love to say you can. A lot of times, the honest thing is you can't. But the point to this is 5-to-1 is a different way of looking at it. If you can win, if you're one win, if you have, this is what I'm taking his 5-to-1 a different direction right now. If you lose 80% of the time, but you're 20% of the time that you win, you break even. So back in the day, if you did any research on commodities, a lot of these traders were winning. It's like your goal was to become a baseball player. You know, what gets a baseball player in the Hall of Fame? Batting 300. So if you're a career, you bat 300. In other words, you win only 3 out of 10 trades that you enter, which is what I used to do. Win 3 out of 10, and the 3 out of 10 that I would win off. This is how I made my money, guys. This is what I'm telling you. That the prop firms aren't made the way that the futures, the way that used to do it old school. Prop firms they take that advantage away from you, because if you lose 7 times, you're probably up against your max trailing drawdown. So, for instance, 7 losses in a row, and I'm losing. Today that'd have been 229, right? So let's call it 250. 250 times 7, I'm down $1,750. Yeah, I closed my website down 123 day trade. It's when you go to my YouTube channel, it's still up there, DTS and whatnot, but it's based upon winning 3 out of 10. Everything that I've done in the past was based upon winning in the environment that I knew how to trade. And it's kind of the double-edged sword, these prop firms that have come up, right? And honestly, I think Apex is the best one out there. I don't get paid as an affiliate for them anymore. I think Nutty Bar and all these other idiots get my money. Nutty Bar I like, by the way. But some of the others out there getting your money and whatnot. Now I've thought about putting, if I was going to advertise, flow money that way and bring affiliates back in that are looking to come into that market. Another source of income, right? Affiliate marketing. But I've had a code out there on my YouTube videos forever, and nobody, if you use my link, I haven't got $1 in over last year anyway. So that's another point. But let's see here. What a journey you had. You should write a book. How to lose in 10 different continents. No. 7 different continents. How to lose in 10 years trading into prop firms. So Factory says, I run about 40% win rate, and my goal is minimum 3-to-1. That's what I have mine set up at, 3-to-1. It's a grind, but when my mind stays out of bad thoughts, it works. Patience. That's a good point. One of the things I like that Martin talks about when you go take his course is you get paid to be patient. So I took his course and I went down that rabbit hole for a while too. You will talk about if my charts are busy, you should see his charts. Now, my 4-minute chart is very simplified. Now I do want to get on this. My sim versus the other way. My sim has less trades. I got a 4-minute chart up, and then I'm looking for A lot of times I'm looking for a 3-bar movement, to be completely honest. I'm looking for a green or a red spike that's hopefully not inside a trading range or a congestion area, or it's attempted a certain time over a certain period of time, 3 or 4 times, like Gann talks about. And then you take that trade 3 bars. When you can have those kind of trades in a 4 minutes period of time, that's what, 12 minutes, 3 bars. So your first bar is your setup bar, and your next 2 bars are your bars that you're trying to make money from. 3 bars. And that's where a lot of my concentration has been right now. Can I make these 3-bar trades? Can I go 20% to break even? Because if I can be one of 5, right? And this is my Paul Tudor Jones concept, and I guess we'll leave on this. Have a good night too, Garrett. If I can take Paul Tudor Jones 1 to 5, so if I can be 20% correct, but when I am correct, I'm at break even or close to it. That's the kind of the process I'm in right now. So if I can be close, maybe I'm only down, and maybe there's 4 trades I'm down, because very seldomly do I take today I was running with a 51 tick stop loss when I entered the trade. But then I would always move behind. A lot of times that 51 ticks is just a setup bar. It gets me in, and then I take wherever that is, and I go to the nearest support and nearest resistance that's in the market at that point on the 1, 2, 3 tick chart. So I'm entering on the 1, 2, 3 tick chart, but I'm looking at the 4-minute chart for my trade setups. Does that make sense? But I'm using the 1, 2, 3 chart to enter the trade. And then I'm going to whatever the nearest support and resistance, and I'm plugging behind that. I might enter with 9 contracts at 51 ticks, but a lot of times I'm moving up to 30 ticks, 24 ticks, 12 ticks behind. And then the market does this a lot of times. My mind's going everywhere. The market never goes up in a straight angle most of the time, right? It goes like this, right? Up, down, up, down, up, down, and then up. If it's rotating. And if it's rotating with a wave pattern, then it's not going below the last support area. So if it's a true nice move, which doesn't happen very often, but if it does happen, a lot of times, and in a down market, it goes down, right? And the last time it comes up, it doesn't go above the last wave of that, because there's a lot of traders that still follow wave theory. And since it's there, you can utilize it, like Fibonacci and all the other stuff that's out there. But you can use it as support and resistance to keep, and knowing that they know that too, they'll run the stops when the market's kind of dead. So you got to stay away from it in a dead market. But when you're looking at it, so like today I run them on 51 ticks on non-contracts. I think we talked about it being $229. But a couple of the trade losses I had today were only like $100 on 9. So I'm trading the MNQ, by the way, 50 cents by 9s, $4.50 per tick. So if I take a max loss on 9 contracts, it would have been 229. If I'd have 3 in a row at 229, that moved me above 500, and I need to stop on the trading day. So that's kind of the thought process behind it. Now, eventually, if the volatility keeps increasing, then you have to lower your contracts down. So right now it's 229. The profit side of that equation, I think, was 678, I think, the other day, or 700 something. So it was 700 ticks, $700 maybe. Anyway, it worked out to be 3 to 1. Anyway, I guess that's where I want to go with that. I think we're done. I think I'm done. I think I've broke this. My wife would tell me I've beat the horse enough tonight. So I appreciate you guys being here tonight. It was fun. We talked about Paul Tudor Jones. How can apply? Now, a lot of that stuff you can't apply into day trading realm. I agree to that, what we talked about tonight as you're looking at this. A lot of that you can't apply, but some of it you can. So if you can take more away, like you did factory, 40%, if you win 40% of your trades, I, on average, win about 50% or more of my trading. And when I'm in the zone, I'll win 8 or 9 days out of 10. And then I have some days that I don't win. But more times than not, I win more of my days than I lose. But the point is to limit the lost days, and that's where my greatest weakness is Kip will. It's not the winning that kicks your ass, right? It's that losing that does it. So my losing days, I'll blow through that max drawdown. I've done it in 5 minutes. I think you can name that tune. I've probably done it in 2. So it doesn't take long when you trade 10 minis in the NQ and enter in the market, and you think, well, I'm just going to say, you go into the WTF mentality and throw 10 in the minis on the NQ. You can name that tune, right? You can probably blow the account in a minute, right? No, I don't have a Discord. I don't have that. Exactly. I like that. That's what I try to do too as well with Factory. Factory says my goal on losses also is to shrink the amount of by moving stops, like you said, and hope to be in a free trade ultimately. So that's why I have the 1.5p set up. Is what I believe in, right? So I'm right now currently I got 9 contracts in the MNQ. Right now I'm settled in. I haven't completely settled in on this. I tried 432. I didn't like that. It didn't work right. Right now I'm testing 531. 5 out at 1.5p. Today that was 46 ticks when I was initially risking 51. It's not correct. You want to have it the other way around. But as a day trader, you can't do this. You have to be, you can't have a 2-to-1 profit target on the whole thing, because what happens? You take the trade on and then it comes back to break even. And if you keep it at the same level that whole time, then you've got 9 contracts up there. It comes back down to your stop. Boom, boom. Next thing you could have an account high. The next thing you know, you're down $2,000 at Apex, and you're thinking, what the hell just happened? It's kind of like that story that I read years ago, and then I was reminded about it. There was a gentleman named Bunker Hunt, I believe is the gentleman's name. He had 400 million in the silver market. He let it run up to $10 billion. Can you imagine having $10 billion? I think at Paul Tudor Jones fame, he was at 17.7 billion, by the way. So he ran it to 10 billion, but before he took the money out, he let it go back to 400 million. That's the problem, right? We don't know when to. Oh, there's a movie on Netflix too, by the way, that was pretty good. It was called. Has anyone watched that? No. I'm gonna physically leave on this. It's called Dumb Money. It's about the run on how they bailed out these idiots that have these hedge funds. But it was on GameStop. Great movie if you haven't seen that yet. GameStop. Trailer. Yeah, the trailer is my nemesis, because I come from the realm of letting your profits run, cut your losses short, take profits along the ride. The problem is that different animal that I've had to relearn, and unfortunately, when I've lost more accounts by being up, like for instance this month, there one in my EAs I was up 2,000, another I was up 1,500, another I was up 1,000. and 2 others I was up 1,000 each. So of my 6 failures, only one of them went against me right off the bat. 5 of the 6 was up at least 1,000 or 1,500 or 2,000 before it went against me. That's what I have to stop. And that's just the mentality that I come into, that I believe that the drawdown, and then I'll buy in a strength position, and then as you're buying in strength, it moves against you, right? It's like, fuck. Next thing you know, you're down, and next thing you're out. Because I added 9 into a winning position where that was working for me in the past. Now it doesn't work in these prop firms. The stuff that it's a whole new ball of wax. And that, if I was a younger man, in learning in these prop firms, no wonder these guys are making a ton of money, because they don't have all the baggage that these older guys like me carry on. All right, I'm going to get out of here. God bless you all. So take care. The 30-minute video turned into an hour 31. Kip's going to love me for this. All right, bye, guys. How do I get out of this? End stream. I'm leaving now. See y'all later.